What's up, guys? It's March 25th, 2025. Sideways day in the market. I want to give a quick shout out to all the new members. Thanks for tuning in. I'm having fun talking to you guys in Discord. So I'll be dropping some more membership videos kind of the beginning of next month, some more trading psychology videos, and yeah, we'll go from there. Trading psychology seems to be a big one that everyone wants to talk about. So yeah, here's the daily chart. Here's the 15-minute chart. Daily chart we've been selling off for quite some time. Now we're finding support around the swing low put in September 5th. Then we had two bull bars in a row, which was different from all these bars because these were just pullbacks. So we had a leg, we had a leg one, pullback, leg two, pullback, leg three. We have a gap up here. So this is becoming a breakout. A reversals are a form of a breakout, so keep that in mind. The bulls are reversing here, but it's causing trap bears, so it's a breakout. Here's a breakout gap as well. It's a pretty big gap. Painted green. It's a bull gap. It's a pretty big gap. Bulls are now getting followed through above the EMA, which hasn't happened in a long time. However, this is the third leg, so we're going to have to start asking ourselves, is this the start to a new leg, or is this the end of this leg, third leg? Or is today's price action here going to get some follow through? Maybe we test the upper parts of these swings. 15-minute chart, we have 3 legs higher. Leg one, pull back, leg two, pull back, leg three, sold off into the EMA, and we rallied for another 3 legs. Leg one, pull back, leg two, pull back, leg three, sideways price action. Bears actually got 3 legs down too. Leg one, pull back, leg two, pull back, leg three. Wedge bottom into support, and it rallied. End of the day. Pretty nice rally. I actually thought we'd go more sideways to down. I thought right around here would be sideways to down, but then we're above the EMA, so that means we're in a bull regime. Bulls have the upper hand. Bull setups fail. Bear setups fail. Bull setups will have a higher chance of passing. So let's just get into it. Yesterday we had a big gap up, rallied, sold off, and then we ended the day in a rally. Today we had a gap up, not as big, so when we have a big gap up, we can see momentum. We can see a tradable leg within that direction for the first. So big gap up, tradable bull leg within the first hour or two, and then we go sideways for the rest of the day. That's what happened here. Big gap up, tradable bull leg, sideways for the rest of the day. Today's gap up wasn't big enough, so you can't say like we did have a tradable leg within the first hour that was in the direction of the gap, because that's not the same thing as yesterday with a big gap up, tradable leg. It looks similar, but so gap up, bar one, bad follow through, rallied, sold off. Bar two, follow through for the bears, it sold off and then rallied back. So I'm counting a leg one, leg two. Leg one, pull back, leg two, pull back, leg three into the EMA with bar four. Bar four closes just on the EMA. Bar five sells off and then rallies back. First bull bar after a gap up, so it's not the best. We had a lot of bullish pressure yesterday, and the first 4 bars are bearish. So already something's changed. I think yesterday's bar 78 changed the context for today's rally because that's just a big bear bar. It's a big bear bar. It's not good for the bulls. You don't want to see a big bear bar in a bull trend. And I think that leg two is this price action right around here. Bar 7 creates a double bottom, so we have a leg one, pull back, leg two, double bottom, which is a bullish setup. You see traders actually bought bar 7 instead of selling it. Small gap up right there. Bar 8 rallies, closing on its high, but still has a tail. We have a lot of tails right around here. Bar 9 rallies, but closes right around the high of bar 8. Bad close for the bulls, but it is a bull close. Same situation with bar 10. Rally sells off, but has a bull close. This is not good. It is follow through, but it's not good follow through. Bar 11. Now we have a good bull bar closing on its high, but it's not closing past bar 10's high. Bar 12 ends up pulling back and then rallies closing far past bar 11. Something different. So now we have a good close past the prior bull close. We are trading around the swing high of bar 1. So right now bar 12 is around the range highs, and we had a big down, big up, so it's trading range behavior. Bar 13? Yeah, bar 13 becomes the first pullback after 5 bull bars. 1, 2, 3, 4, 5. First pullback tail. You could buy that for a scalp, and the scalp would work with 14, 15. Start to go more sideways. So you have about, if you bought 13, if you bought this, you have a lot of time to get out before it turned around on you. And it does. So leg 1, pull back, leg 2, pull back, leg 3, tail of 17 is that leg 3. And we go sideways. After the third leg, the probabilities for trading range behavior go up. And that's what we got. We got trading range after 3 legs higher. You could even count yesterday's price action as 3 legs too. So you could say leg 1, pull back, leg 2, pull back, leg 3. Probabilities for trading range behavior go up significantly after the second leg. Really want you guys to think in probabilities. Like, are you taking a trade based on momentum, probabilities, market regime, or are you taking a trade just because you just think it's going to go this way? So just ask yourself that next time you take a trade. Is this something repeatable or just a one-off? And there's nothing wrong, whichever way you want to do, trying to bring awareness to becoming more consistent. So the same way that you would take this and then scalp that, you could say, here's 3 bear bars, 27 just shallow pullback, and then you could scalp that. You get 28, 29 strong enough to see follow through. Now we're getting a big bear bar closing below the EMA. Something we haven't had since, I think, yesterday. Yeah, yesterday kind of got a big bear bar, but bad follow through. Today, 28, 29 got follow through. We started going more sideways. So probably sound like a broken record now. But third leg favors trading range behavior. Leg 1, pull back, leg 2, pull back, leg 3. We're at the range lows. Then we see another 3-legged rally. 38 is an inside bar, so I think it's best to get out shorts if you are holding short for this whole thing. We've had a lot of legs down. We are in support, and now we have an inside bar. That's the only type of bar that's not breaking out, so it's best to get flat and wait for the breakout. 39, it's a reversal. The reversals are a form of a breakout. Leg 1, pull back, leg 2, pull back, leg 3. 44, testing the breakdown level. 45, good bear bar closing on its low. I think good enough for trend continuation for the bears. Leg 1, pull back, leg 2, pull back, leg 3. You can see how there's major legs that are made up with smaller legs. So this could be a major leg, pull back, leg 2. Then within this leg, there's 3 legs. And then you can say this is a major leg. It had 3 legs, leg 1, pull back, leg 2, pull back, leg 3. Then the legs are starting to shrink, but leg 1, leg 2, leg 3. And then the third leg down here had 3 legs. Leg 1, pull back, leg 2, pull back, leg 3. Just how you could say, here's 3 legs higher here. Leg 1, leg 2, leg 3. Each of those legs were made up of 3 legs. Leg 1, pull back, leg 2, pull back, leg 3. Leg 1, pull back, leg 2, pull back, leg 3. Leg 1, pull back, leg 2, pull back, leg 3. And each of those legs had its own 3 legs. So that's just an example of fractal price action, how on a higher time frame this would all be 1 leg, but now we're on the 5-minute, we can see the inside also had legs. So to rephrase that, on the 5-minute this is 1 leg, but on the 1 minute there's 3 or 4 legs. Actually, let me draw it in. So leg 1 could say leg 2, and then the low of 12 would be the pullback for leg 3. See, rough drawing. It's a rough drawing, but that's what I'm trying to get at. Is that major legs are made up of smaller legs and smaller legs, and then on a smaller time frame, lower than the 1 minute, there's 3 legs here, 3 legs here, leg 1, pull back, leg 2, pull back, leg 3. So you guys see how the time frames kind of start to tie into each other. I didn't do a mic check, so I really hope the mic is working for this video. Okay, so I think we were right around here. Leg 1, pull back, leg 2, pull back, leg 3, testing the swing high, sells off for a bigger leg 2 move. 45 closing on slow, 46 closing on slow, 47, 48 odd closing on slow, shotgun skip continuation, but it's 4 bars in a row. After the 3rd bar, the probabilities for a pullback go up, and you can see a pullback, a 2-legged pullback for the bulls. Leg 1, pullback, leg 2, and bears gets its own 2nd leg right here. Tail of 56 goes 1 tick below 48. Then it rallies. We have a 4-bar rally, but this ends up just being somewhat of a pullback. So it could say it's an expanding triangle from here, 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 and here. Sells off for another leg lower. leg 1, pull back, leg 2. 59, 50, and 60, trying to get some more. There's enough momentum to see it tick below 60. We see that with 61, but it ends up being a pullback. And then we have 3 bear bars in a row, 62, 63, 64. It's climactic price. It's not climactic price action. It's 3 legs lower. It's a nested wedge. Leg 1, pull back, leg 2, pull back, leg 3. Leg 1, pull back, leg 2, pull back, leg 3. Then we go sideways and have a breakout at the end of the day. I was actually more bearish around 72. There is a divergence with MNQ with the micro. I was trading NASDAQ today, and on this bar 74, NASDAQ was rallying, and I saw it selling off. I was like, oh wow, there's a divergence. That's pretty interesting. 75, bull bar closing outside. 76, bull bar closing outside, showing to get continuation. Deep pullbacks. 74, 74. So there's swing points here, but I was thinking the breakout could start here, but 74 takes that out. So let's just say this is a complex leg 1. Pull back leg 2, pull back leg 3, or you could just say you could even say leg 1, pull back leg 2, pull back leg 3. The most important thing with leg counting is understanding where you are in the market cycle, so you can size up the probabilities and take a trade based on probabilities and price action. And later on, when you watch the trading psychology video, you can match up your emotions to the price action, to the probabilities, and you become this ferocious trader. Not too many gaps. We have a gap here. That already tells you that it's a weak rally because there's only one gap into the end of the rally. And that sells off. We got 2 more gaps here that eventually get closed. Remember, trading range price action gaps get closed. That's one way to tell what the probabilities are for shorting lows or buying highs, is that if you're buying highs and shorting lows, and in this case, the bulls just close this gap, you might actually be buying a swing high. It reversed down. If you want to short here, well, the bears just close these gaps, so it might start to reverse. So that's one way to use gaps to your advantage when you're trading. In trending environments, gaps will stay open. There's a gap here, gap there, and these stayed open, so there's more bull pressure. Gaps are starting to close, so bear pressure is stacking up, and then this gap stayed open and ended up being a rally. Not necessarily the same exact price action today, but just an example of trending behavior gaps and sideways behavior gaps. So yeah, another quick one, guys. I hope you guys are enjoying these videos. I love talking to you guys. Thank you again for all the new members. I appreciate you guys joining. And if you've been following me for a long time, I also appreciate you guys. There's some of you that's been following me for a few years. So it's pretty crazy to see all this come together. I hope you guys are doing good. If you learned something, share the show. Don't be a hoe. I'll talk to you guys tomorrow, and I'll talk to you guys tonight in the Discord. Thank you, everyone. Have a good night. Bye.